and welcome to today's webinar, Buying a New York City Home in a Virtual Market, presented by StreetEasy. Before we get started, I'd like to go over a few items so you know how to participate in today's event. You've joined the presentation listening using your computer speaker system by default. If you'd prefer to join over the telephone, just select telephone in the audio panel and the dial-in information will be displayed. You'll have the opportunity to submit text questions to today's presenters by typing your questions into the questions pane of the control panel. You may send in your questions at any time during the presentation. We will collect these and address them during the Q&A session at the end of today's presentation. Today's webinar is being recorded and you'll receive a follow-up email within 48 hours with a link to view the recording. I would now like to introduce StreetEasy's Director of Marketing and Communications, Lauren Rieflin.
Thanks, Lori. Good afternoon, everyone. As Lori said, my name is Lauren Rieflin and I head up communications here at StreetEasy. Thank you so much for being here. I'm usually welcoming you all in person. This year would have been StreetEasy's 5th annual spring home buyer event, and we were gearing up to have it be the best one yet. But as it did for everybody, our reality shifted pretty quickly. We were determined to still bring you timely resources and information to navigate what has certainly become a truly unique New York City home shopping process. So we paused to take some time to figure out how we could do that virtually. And here we are. I'm coming to you live from my little corner on the Upper West Side in New York City for StreetEasy's first virtual New York City home buyers event. I hope you and your families are comfortably quarantined wherever you're tuning in from. We have a packed agenda for the next hour, kicking off with our economist, Nancy Wu. Nancy, you want to give us a quick wave? She'll be walking through her research on some of the trends we're seeing in today's sales market. Then we'll move into a conversation with Tony Zhao of Investors Bank and Jenna McKay of Compass. Guys, give us a quick wave. And we'll discuss with them navigating today's market. They'll share insights about mortgage rates, how to search, tour, and close on a home virtually, and share some stories of their experiences helping clients in this environment. At the end, we'll have time for Q&A with all of our speakers. And a quick note on Q&A, as you heard in the opening, you can submit questions at any point using the question feature on your GoToWebinar control panel. Okay, let's get to it. First up, we're giving you a sense of what's happening in today's New York City real estate market the best way we know how, through data. Nancy, take it away.
All right, thank you, Lauren, and hi, everybody. Thanks for attending our virtual home buying seminar. My name is Nancy Wu. I am the economist at StreetEasy, where we do a lot of the research on all of the market data on the sales market. So I will begin by giving an overview of what we've been seeing on the market so far as we head into the season, and then some updates on where they're going amid this COVID-19 situation. So I just hope everyone's being safe and healthy. I am coming to you from California right now, quarantining here. And it's a really exciting time to both be a buyer and to be an economist to make sense of all this data. So I'm really excited to share this data with you guys. So to start off, we'll talk about where prices currently are on the market. These are the median closing prices for every borough across the city as of the first quarter of 2020. So that means that half the homes sold above this price in these boroughs and half the homes sold for below this price. And this is going to be a bit lower than what you're seeing on StreetEasy because the asking prices tend to be higher than the closing prices. And we've seen that over 80% of homes actually close below their asking prices. So that's a really good thing to keep in mind as buyers out there to stay informed and be able to negotiate. And our goal here is to give you the data to do that. So looking at where prices have been going, we are looking at the year-on-year changes in home prices by borough right now. So prior to COVID-19, sales prices have been slowing down for the 3rd year in a row now. Manhattan prices had fallen to a 6-year low, and they've been falling for the 3rd year in a row. Prices in Brooklyn have been fairly flat for the past 2 years, and prices in Queens have now been flat as well after growing at a slower rate for the past 2 years. So there's been a sales market slowdown in terms of prices, This is a bit different from what we were seeing in the Great Recession when prices were at the top of the market before they started falling. We're heading into this crisis right now with prices already falling for a few years now. And so far, prices have not shifted since the stay-at-home orders took effect, but that could change in the coming months, and we'll talk more about that. More context on where the market's been going. Homes have been staying longer on the market. So we traced median days on market, which is the days between when a sale was listed to when it went into contract. And we've seen that Manhattan's homes have been increasing their median days on market for the past 6 years. So that means the market has been fairly strained. Time on market has been increasing as there's been more time for buyers and sellers to negotiate, and also for sellers to find buyers. In terms of inventory, we're seeing that inventory on the sales market has been reaching record highs coming into the pandemic. So the takeaway here is that where the market has been before the pandemic hit, it was a really tough time to be a seller and a good time to be a buyer, generally speaking. So we were headed into a really busy home buying season this spring. There was a buyer's market set up. This is going to be our busiest home buying season yet. And then COVID-19 happened and kind of flipped the housing market on its head. So what happened next? We looked at week-to-week changes in terms of new inventory coming onto the market. And we saw that the number of new listings coming onto the market each week fell by over 70% in the second half of March compared to the first half of the month. And every week, the inventory levels coming onto the market has been similarly low. And it makes sense because right now, a lot of sellers and landlords are avoiding listing inventory in order to minimize in-person contact. We've seen that pending sales has also been down by 70 to 80% year over year each week. So these indicators are showing that there's been a slowdown in both demand and supply. We've also seen that the share of price cuts on the market has been decreasing since the pandemic hit the city as well. So sellers are waiting to list their home prices later, potentially for a higher price, instead of giving discounts to win a quick sale right now. And it makes sense because sellers typically cut prices to incentivize buyers in a weak sales market to move their properties more quickly. But when activity is paused, then price cuts are paused as well. So that means that sellers that are currently on the market might be more motivated. We're seeing that even though there's a huge decline in the share of price cuts, the median price cuts have actually been larger. So that means that if you're looking on the market now as home buyers, it's a good time to really negotiate because the sellers on the market might be extra motivated. So the big question that everyone is wondering, how will COVID-19 impact home prices? This disruption plus the historically low mortgage rates have many of you wondering if COVID-19 might bring a chance to buy a house at a relative bargain. And the answer is that it ultimately depends. We're going to highlight some best and worst case scenarios based on our current data. So in the best case scenario, home shopping season would merely be delayed. And as stay-at-home orders are lifted, all the inventory that we saw come off the market will go back on. Home buyers like yourself will come back onto the market as well, and the market activity would resume. It's possible that there's a lot of pent-up demand right now, and people are taking a wait-and-see approach and waiting out the market, whether you're a buyer or a seller. In this case, we would expect the previous long-term trends to continue, with Manhattan prices continuing to fall at a steady pace while those in Brooklyn and Queens stay flat. That's the trend that we've been seeing in the long term, and it's not going to change if things go back to normal. However, the best case scenario might be a bit too optimistic, and bigger impacts are likely. The IMF and S&P Global Ratings are talking about financial and credit market pressures, and that will impact New York City a lot, as this is the center of the financial and credit markets. And there's going to be a lot of job losses as well. And if job losses and credit pressures don't turn around over the next couple of months, then we could see a major recession as a potential possibility. A major global recession could trigger an environment that's similar to what New York endured in a Great Recession. And under this scenario, there is a potential for a drastic fall in home prices driven by these main factors. Record levels of unsold inventory has already been on the market, and it's not just going to disappear without demand going up as well. But supply could go up even more as mass foreclosures after the national moratorium is lifted come, and that would further increase the housing supply. And demand could go down if there's any major declines in the stock market that wipe out the savings of potential buyers and decrease the economic confidence of would-be buyers. So with demand going down and supply going up, then we would see a fall in prices. In particular, condos and new developments could be hit the hardest. We've seen that heading into the situation, 1 in 4 condos that were built since 2013 remain unsold, and over 5,000 new construction units have yet to be completed. So there's a lot of room on the market for prices to fall even more. And these new developments especially, there's an overload of inventory on the market currently, and there's a lot of room for negotiations there. So no matter what happens, here is my advice for buyers. If you're looking now, you guys are in a really good position. Mortgage rates have hit record lows, and prices we've seen are no longer at their peak. When prices are no longer at the peak of the market, that means homes are less likely to sell for a loss when you do buy your home now and sell it in the future. We've seen that typically when you purchase a home at the top of the market, you're more likely to sell for a loss, but when you purchase them when they're no longer at their peak, then you're less likely. And homes now have been falling for the 3rd year in a row now, so it's a good place. But those who can wait can see even larger price changes in the coming months because prices still have more room to fall. Time on market and inventory shows that sellers really need to reduce prices significantly in order to sell. And a lot of sellers have been unwilling to publicize price cuts. We've seen that over 80% of homes close below their asking price, and yet we're not seeing that many price cuts on the market. So any negotiations should really take that into account. And if you can wait, then prices are likely to drop further. But if you're buying now, then you should really take this into account in your negotiations as well, especially with the more motivated sellers currently on the market. So that being said, buying a home is definitely a personal decision, and when you buy is ultimately up to you. And we have a lot of resources for you to maximize your research and be able to get the best deal possible. We did some research on neighborhoods. We know that New York City is a city of neighborhoods, and every neighborhood can be so different. And after staying at home for so many weeks, we've seen that space is going to be on the top of mind for many of you guys in your next housing search. So we looked into the neighborhoods with the lowest price per square foot. And a lot of these, so we looked at the top 3 neighborhoods in each borough, and they're listed here. A lot of these are farther out, so they take a longer commute time, but that trade-off is going to be an important one to consider as many of you are navigating working from home and potentially working from home in the future as well. So space might be more of a priority with commute time being less of a priority. So we thought that this would be a really relevant piece of research to show you guys if you're looking to stay within budget and also find a home that has a lot of space. We have a lot of tools to help you make the most informed decisions in your home buying process, and one of those is our data dashboard. The link is below here, and you can customize this to your findings. You can look through different neighborhoods, different boroughs, compare it to the city, to other neighborhoods. You can look at sales and rentals, co-ops and condos, any bedroom size, for any of the metrics that we trace. So it's a really useful resource for you to tailor to your needs and look at the factors that are most important to you. And we also offer a wealth of tools on our blog page. And to keep it up to date with our latest research, check out our blog. All of the research that I just talked about is there, including all of our monthly market updates. And be sure to follow me on Twitter and LinkedIn if you want to stay in touch or have any questions and want to stay updated. And I'll be back for Q&A, and I'll turn it over to Lauren right now.
Awesome. Thank you so much, Nancy. Now everybody is an expert in the New York City real estate market. Hopefully you took some good notes, but even if you didn't, don't worry. This is recorded, and as Nancy pointed out, there's all of that data is housed on the StreetEasy blog, one block over. You can access it for free at any point. Don't worry about memorizing. Now on to part 2. I'm excited to welcome 2 local experts, Tony Zhao of Investors Bank and Jenna McKay of Compass. You guys are both with me. Cameras on, mics on, awesome. So gonna be chatting with Tony and Jenna, who are gonna share their on the ground perspectives about how to evaluate and navigate today's market as a buyer. Before we dive into the conversation, I'm going to request a little bit of audience participation. We're going to put up a poll. So if everyone goes over into their control panel and go to webinar, let me know your feedback on this. Want to gauge how confident everybody is about entering the buyer's market or buying a home in these current conditions. Has COVID-19 made you more or less confident about buying a home in New York City? So I'll give everybody a couple seconds to answer. Let's see, less confident, it's taking the lead. More is starting to tick up. Give everybody a couple more seconds. Last call for responses. Alrighty. Okay, let's go ahead and close the poll and show those results. Let's see what we got. Okay, so 29% are more confident, so believe they can get a good deal, and 40% less intend to wait and see what happens. But there's still a chunk that are unchanged, and also a chunk that are unsure. All of the above are fine. We're happy you're here to hopefully get some more info and help you make those decisions. So let's with that, let's kind of get into our first topic of discussion with Tony and Jenna, evaluating today's sales market. Just a small topic. I'm going to start with you, Tony. From your vantage point, what's one primary way the market has shifted from just a few months ago? And actually, you know what? I'm actually going to back up, and I'm going to ask you to give me a little bit of an elevator pitch about who you are and what you do, and then answer the question.
Thanks, Lauren. So everyone, it's an honor to be here. My name is Tony Zhao. I work for Investors Bank. I do residential lending, and our primary book of business is New York and New Jersey. You know, we're not a centrally located bank in the Midwest. So all we do is New York City. So the bulk of what we see are condos and co-ops and, you know, homes in the outer boroughs. So we're just like everyone else in New York City, which is the center of pandemic, and we see what's been happening. So, you know, I do business locally, and what we see has been very, very different than the rest of the country. So that's just a little bit about myself and my bank.
Great, perfect. So yeah, now let's jump in to our first question. So let's talk about dynamics and how the market has shifted. So how from your vantage have things changed? Shifting mortgage rates, the ability to get a mortgage, how have those things changed over the last couple of months?
Yeah, great question, Lauren. So, you know, prior to the pandemic, rates were teetering somewhere between 3.5% to 4%. Because remember, interest rates are tied to economic events and also geopolitical events. So when the freeze started happening sometime in the first week or two of March, you saw a huge plummet in interest rates. Some banks went from 4% to almost 3% on a 30-year fix, where it is currently, you know, hovering around. So if you're a consumer and you're a buyer, okay, you were getting a 4% interest rate, and now you're privy to this 3% interest rate. That's going to save you hundreds of dollars a month, tens of thousands of dollars a month over the life of the loan, or just in a short period of time. So that's giving the buyers a great ability to afford more. And you know what I always tell my consumers is, look, buying a home is not something that you're going to buy because you're looking to make 5, 10, 15%, or you're not going to sell it overnight and flip it and do a quick flip and make money on. buying a home is a great utility for you to write off your mortgage interest, right? Your mortgage payment is very, very different than what it really is after your mortgage deduction carrying cost. So imagine somebody paying $3,000 a month in mortgage payment. After deduction, it could actually be $2,500 or $2,000. And of course, always CPA or somebody in that profession before you commit to buying a home so they can tell you what your post mortgage tax deduction payment would be. So in my opinion, buying a home is still something that if you can afford it and have the ability to do, is still a great investment, especially with what's going on in the stock market.
Great. Yeah, and I say there's one phrase or term that I'm going to make you say one more time. Post mortgage tax payment. Say it one more time for everybody.
So it's really your carrying cost after your post mortgage tax deduction. So that's the payment after you deduct your mortgage interest from it. And prior to the pandemic, you rarely sat in front of a loan officer and got a pre-approval and got a commitment. So on the bank's end, everything was done, on a virtual level, right? You sent your documents to your loan officer, everything was done behind the scenes remotely and virtually. So getting a pre-approval and doing things of that nature has not changed. So it's still relevant the same way that's being done prior and actually during the pandemic.
Great. Okay. Wonderful. Thanks, Tony. So another really big question, especially in New York City, which, as many of us know, is a city of renters, thinking about evaluating, pros and cons of buying a home in the market, and whether you should continue to rent. So I'm curious to get each of your perspectives on kind of weighing that decision. What should people be thinking about when they're trying to decide between renting and buying? Tony, do you want to start us off?
Yeah, so look, buying a home may not be for everyone, right? Because as we all know, buying a home in New York City is expensive. The closing cost on a condo, anything that's not a co-op, can range anywhere from 2 to 5%. So I actually have a versus buy calculator. And if you plug in or enter your personal data, it actually shows you if it's worth it for you to buy a home or if it's more beneficial financially to rent or keep renting. Because this year, the IRS has come out, and this isn't for the purpose of buying a home. They're waiving their penalties on early withdrawal from 401k plans and retirement plans. And of course, I certainly urge you to speak to a CPA or financial advisor before making such a drastic move. But that's another avenue for you to grab down payment money from, because buying a home in New York City is pretty, expensive.
Great. Yeah, and Jenna, I mean, anything to piggyback plus do a quick intro for yourself?
Sure thing. I'm Jenna McKay. I'm a licensed real estate salesperson with Compass, which is long for real estate agent. And I am really excited to be on the panel today because I think we have such an insider view that a lot of my clients and friends always ask me about, and now we get to share it with people in 1 hour, which is an awesome experience, I think. Back to the question, I definitely think what Tony has in terms of financially qualifying yourself is a great first start. I always also ask now, especially of any prospective buyers, is how secure do you feel in your job? And this is especially important if you're financing. And for those of us that are lucky enough to have financial security, my next question is, how much do you have saved aside from the down payment? Because in most New York City co-ops, there's a requirement for 12 to 24 months of post-closing liquidity and a 28% or higher or lower, of a debt to income ratio. And these are all the things that we would discuss during the initial consultation, which is a very, very important part of the process because it can make or break your plan for buying now versus potentially, a year from now. And if anybody has a question about what post-closing liquidity is or debt-to-income ratio, feel free to drop a question into the chat and we can address it later during the Q&A.
Great. Yeah, we are getting down into all of the lingo, all of the jargon. I love it. Yeah, definitely drop a question in if you're curious about diving into either of those. Thanks, Jenna. Moving along to another topic, if we could advance the slide, I want to talk about the actual process of buying in NYC right now. So even on StreetEasy, we've seen an enormous uptick in the addition and also views of virtual tours and listing videos, virtual walkthroughs. Buyers are looking and touring homes in a whole new way. But before we dive into your experiences, I want to put up another poll. Audience participation, I'm keeping you guys awake out there, hopefully. Let me know what you think here. So would you feel comfortable putting an offer on a home based on photos and virtual tours alone? Yes, no, maybe. It's definitely something, homes are still closing. I'm excited to talk to Tony and Jenna a little bit more about that. But it's it's such a large investment. You wonder how comfortable you can get through just virtual materials. So still people coming in. Last call for responses if anybody wants to jump in. All right, I think we've peaked. Let's go ahead and close the poll and show me the results. Kind of feel like a game show host with these polls. Show me the results. All righty, so overwhelmingly no. Only photos, only a virtual tour. Not quite enough, but I think the 20% of maybes and the 8% of yeses maybe weren't there before. But that's great. Thanks everybody for jumping in on that. Now let's dig a little deeper on that. So Jenna, I'm going to start with you on this one. What has changed about the home shopping process amid COVID-19, especially with the social distancing safeguards in place? What, from your vantage, does that touring a home look like right now?
Sure, thanks, Lauren. It's a whole new world of New York City real estate. I think for not just for buyers, but for agents and sellers and everybody involved and tenants. We are still not allowed to do any physical showings, which makes it a little hard to sell homes and to tour homes. But quickly, and I'm sure you guys are seeing this on StreetEasy, especially with how easy it is to now tour homes by clicking virtual tour as one of the filters. That's becoming something that buyers are more and more comfortable with. And in fact, I have a buyer that's purchasing a co-op in Chelsea entirely based on videos and photos. We're in contract right now. And, this is an interesting scenario because we'd started our search before the shelter in place announcement. So he had seen about probably 20 homes prior to that, just on the weekend, 4 or 5 at a time. And, after the shelter in place was announced, I really wanted to see if he wanted to continue. And he was fine. He said, I'm okay with the fact that I may not be able to see this apartment until I close. So with that, we kept on rolling, and we were waiting to see if there were any homes that he would be interested in. And luckily enough, there was one that was in a building that he had previously been to. So that's a big caveat, I think, for a lot of people is, there has to be some level of comfort, whether it's through your agent providing information about the neighborhood, or your familiarity with a building, or perhaps even the unit from before. That usually helps, but not always necessary. And in this case specifically, when the apartment came on, there were only maybe 4 photos, and they didn't really paint the full picture of the apartment. So I had reached out to the listing agent, and I had requested additional photos and videos, and I did so quickly because I knew this was a really popular building. So we asked her to take a video near a window with the window open so we can see what the noise level would be like. And it's a really peaceful block in Chelsea, so there weren't really any surprises, but I highly recommend doing that, especially if it's somewhere like Midtown where you have a concern about noise. We also asked her to stand in different parts of the apartment so we can get an idea of different vantage points from the inside. We had her take photos of all the appliances, measure the closets. I mean, we put her to work. But she was so forthcoming with the information. She's a seasoned veteran. You know, she wasn't very tech savvy, and she knows this. But she was so willing to provide us with additional photos and videos that made us feel comfortable to move forward, and we did. And he's so happy. And you know, there's definitely a way to get it done, but I would just highly suggest you know, narrowing in on something that you like already, and then moving forward with requesting information. Otherwise, you're going to be running around asking for videos and photos for every listing, and it's just going to be exhausting.
Yeah, and that's interesting that you call out the like videos or photos from different angles of the space, or you know, a video from a window, so you could kind of get an idea of noise. I mean, is that something that you had asked, like you would ask before COVID was in place, or this is like a rubric?
No, and that's such a good point, because that's something that you would always address during a physical showing, right? It would be potentially a client of mine that would go to an open house without me, and you know, he would say, I like this apartment, what do you think? I would go at a different time, and you know, knowing the neighborhood in the area, if I had a concern about noise, I would potentially come back, you know, during rush hours to see what it's really like. But now that we can't see properties in person, video is the only way to really tell, unless you're in the city and you're able to kind of do a little walk around the block.
Gotcha. That's interesting. So that seems, I mean, you know, creating that checklist with your buyer's agent sounds pretty darn important to do. And has it been, another follow-up, has it been pretty routine or expected for listing agents to, like, is there a reaction to a request for more videos or more photos? Do they welcome that, or is that kind of out of the ordinary?
It's a great question. I'm starting to see more and more that it's becoming the norm, and it's something that agents have at the ready. There are still agents that don't have videos and tours set up for their apartments, in some cases because the building is not allowing outside visitors in, and you know, perhaps if the seller is not living in the apartment, then there's no way to really get a video done. But my tip is always my tip to buyers and anyone out there who's looking is always reach out for more videos and photos, because what's listed on the website, whether it's StreetEasy or Compass or anywhere else, is not always going to be everything that they have, right? Because part of what we do is we put pretty photos up so you're excited about the apartment. We're not going to put every photo out there and every video,
Sure.
But when you're looking to buy a home, especially sight unseen, you're going to want to see every video and photo.
Yeah, great. Okay. So that's not off limits. Just because you're not there does not mean you can't ask the exhaustive questions. Probably important now more than ever. All right, let's get into the transaction. And I know we're, for everybody listening in, I know these are big topics to unpack. We want to do our best to kind of cover at least surface of some big topics, but please ask questions, and we'll get to as many as we can at the end. And also, any of your feedback will influence the next topics that we can dive into deeper in our next webinar. So I know this is jam-packed and a lot, but we want to keep going and at least get to a decent menu of things. So with that, moving on to the transaction. So talking a little bit more about what happens if a buyer like your client Jenna actually does find an apartment. So what does the closing process look like in today's market? Roadblocks or slowdowns that a buyer can anticipate if they're trying to close on a home right now? Tony, if you want to talk about that and maybe what you've seen as you're helping people close.
Absolutely. Lauren, there is a ton of transaction. Now, not mainly just on the purchase side, but a lot of people are doing refinances, right? So if you had a mortgage in the last 10, 15 years, and you lower your payment from, let's say, $2,000 a month to $1,500, it's worth it. So you're going to go through the entire process. And the refinance process and the purchase process are very, very similar. Now, the only hurdles and speed bumps that we're seeing is that when you do a purchase or a refinance, an appraiser must enter the property, right? The appraiser needs to come in, take a few pictures of the property, and if you've ever seen an appraisal report, it's about 60 pages. So the appraisal report is going to have interior photos of the property. It's going to have, property information, anything about the condo co-op that you're buying in as far as who occupies it, who's using it as an investment property, because these are things that the bank determines if they can lend in a building or not. So you have a lot of co-ops right are just not letting anybody in who does not live in a building. So we as a bank have made a decision that on our portfolio for New York City, we don't require a full appraisal. So we'll ask the appraiser to do a drive-by, and they'll do their best as far as getting us an opinion. Because remember, just because you go into a sales price of, let's say, $500,000, that doesn't mean the bank is going to lend you a percentage of that $500,000. They're going to lend to you based on the appraisal report, whatever comes in, whatever is the less of the two. So what we've seen on the transaction side is the appraisal or the appraiser getting into the property is some of the issues that we've been seeing. So we've issued that drive-by appraisal, so that the appraiser itself doesn't have to enter into the property. And we're seeing a lot of management agents not having the ability to maybe get us financials on a building, get us documents on a building because they're not in the office. When I talk to a new buyer, I always tell them, 70% of getting a mortgage in New York City is about the building you're going to buy in, and 30% is about you and your income and your credit. Because if we're putting up 80, 90% in a building, we want to make sure that that building is fiscally sound. We want to make sure that there's not going to be issues coming down the road, because that could impact the buyer. Let's say if there's an assessment. So it's kind of a trickle down effect where the building has financial troubles. They're going to pass down the financials issues to the buyers themselves, which is going to cause them to be late on a mortgage. So when a bank does a loan, they're going to ask for tax returns for the building itself. They're going to ask for a budget. They're going to even want to see their checking savings account just to make sure they have enough reserves. Now, back in the days, closings, you had a buyer's attorney, you had a seller's attorney, you had maybe the co-op attorney, and then a bank attorney. Well, nobody's wanting to get in the same room to be close to each other. So the biggest change that we've seen on the closing end has been virtual. We had a few closings today, and they're all being done via Zoom. Or, you'll see a lot of lobby closings where the notary or the attorney will go to the lobby of somebody's home. Somebody will come in and just, notarize your signatures. We've had attorneys drive to the client's home, drop off the FedEx package with the closing documents. They'll wait in their car for them to finish signing, and then they'll pick it up. So you're going to see a lot of nuances that never happened prior to the pandemic, and it's going to make the closing process, in my opinion, a lot more efficient.
So you think these are going to stick around even after things start to reopen and maybe loosen up?
I certainly do, and I think that a lot of banks, a lot of closing attorneys, because remember, when you buy a home in New York City, you have to give the seller 10% of the sales price. So there's always attorneys involved because, they want to make sure that your down payment is secure, it's protected. God forbid something happens prior to closing, you're protected. These are attorneys that really don't want to put themselves in harm's way. So they're going to be creative. They're going to come up with methods and avenues for you to be able to do a closing virtually via, you know, whatever the case may be. And a lot of banks or attorneys are giving each other power of attorney so that there's not 4 or 5 individuals coming to the closing as opposed to just 1 or 2.
Perfect, thank you. And I'm going, I'm actually gonna go to our, just doing a quick time check. I wanna make sure we have time for questions at the end, but I do wanna get to our last panel topic, which is preparing to buy. So, you know, for buyers who are in the earlier stages of the process, you know, the ones maybe in our poll that were the unsures, the maybes, what can they do now to put themselves in a position, a strong position for the future? And Jenna or Tony, either of you guys feel free to start.
Start if that's cool.
Tony, go ahead. I think you have a good point about getting finances in order here, which I'll piggyback on later.
Great.
So you certainly don't want to waste, you know, somebody like Jenna's time, and you certainly don't want to waste your time. You're looking at properties on StreetEasy. You need to make sure that you have the ability to have a bank that's going to back you up. Banks in the country are right now retracting from lower down payments. We have not yet, so we're just still doing lower down payments on a home purchase, but it is vital for you to interview different banks because different banks have different guidelines. They have different down payment abilities, and they also have different rates. So I wouldn't say call 5 banks and let them run your credit because you certainly don't want to take a ding on your credit. So interview them, see what your down payment, what your rate is, what they're offering, and then prepare your income and assets because that's what a bank looks at when they do a pre-approval. So if you work for a company, meaning a W-2 employee, make sure you have your W-2s for 19 and 2018 readily available. Have 2 most recent pay stubs. One thing that we've seen is, you know, in the month of March, a lot of corporations were shut down and a lot of people didn't get a paycheck. So be ready to have somebody in HR or a great explanation as to why your year to date is off from your salary, because guess what? An underwriter or a banker is going to review that and they're going to say, why is it off? And they're going to take that into consideration. If you're self-employed, it is vital that you have your last 2 years of tax returns, all pages of the federal for personal business readily available too, because the banks want to see the health of your business, especially now. Because think about it, your income from last year will probably differ much more this year due to the pandemic. So that's going to be something that's going to be a case-by-case basis. Banks are going to want to look at that. They're going to want to vet it and dig into it. Just because you have a ton of assets or great credit doesn't mean that the process is going to go smooth. So it's extremely important to have all these documents ready and make sure that your CPA is around to answer any questions if you are self-employed. Jenna?
Great. Yeah, Jenna, anything to piggyback on that?
Yeah, absolutely. And that's such good advice from Tony. I think the main point here is that you want to take this time that we all have a little extra of to really prepare yourself. And aside from identifying neighborhoods and buildings that you might like, which is the fun part, you really want to assemble a great home buying team. And that team includes someone like me and Tony to represent you as a buyer's agent and as a home lender. And outside of that, all New York City real estate transactions also require you to have a real estate attorney represent you. And this is a really important part because once we're done finding your dream home and once Tony starts getting involved from the lending side, this is where your real estate attorney steps in as well to help you understand whether it is a building that you want to buy into. This is where they will do due diligence, which is how we call it here in New York, where they'll review board meeting notes, financials of the building, any open permits that, you know, or any liens on the building that may prevent you from closing. And all of this information will come from your real estate attorney. So it's somebody that you really want to feel comfortable with. And I always recommend interviewing at least a few just on the phone. It doesn't have to be anything formal, but you want to find somebody that you jive with and that you're comfortable with. And another tip that I always suggest to my clients is, once you identify who this real estate attorney is, make sure you have their information ready to go when it's time to submit an offer, because in my experience, I've seen this play out several times where you submit an offer and there's somebody else that wants to buy that apartment. And if you have all of your things ready to go, if you have a pre-approval from Tony, you have all the information ready to go with me on the revenue financial statement, which we can talk about later, and you have your real estate attorney's information in the offer, then the seller is really going to think that you're a buyer who's very prepared, who's willing to act quickly, and perhaps choose your offer over somebody else.
Great. So the home buying team, real estate attorney, mortgage broker, and a buyer's agent. Am I missing anybody? That's it.
I think that's it.
Yeah. If anyone walks away with, if that's the only thing you walk away with, I'll be a happy camper. Okay, let's shift over to Q&A. Nancy, if you want to come back and join us, that would be great. And I'll get into our first question, which Jenna, I'm gonna give over to you, the condo versus co-op question. So what's the difference, and which is better to buy, and potentially is there any upside to reselling between one and the other?
It's a great question, and a question I get probably every day. And it's an important question because in New York City, majority of our inventory, especially Manhattan, is co-op. So for a lot of people, co-op has a little bit of a negative connotation. They think it's a really scary process and, oh gosh, the interview, what's going to happen? And when it comes down to it, all co-ops are a bit different. And I think the best question to ask yourself is this purchase going to be something that you're eventually going to turn into an investment property? So for example, if I'm looking at buying a 1-bedroom apartment, but I know in 3 or 4 years, I'm going to need that second bedroom, or I'm going to want, a townhouse, then I would suggest looking at condos, because holding a co-op for 3 years is probably not long enough for you to see enough appreciation. And you wouldn't want to put yourself in a position where you buy something and you have to sell it 3 years later. And the reason why I say that is most co-ops have some restrictions on how often and for how long you can sublease it to a potential tenant. So if it's 2 out of 5 years, you're giving yourself that extra you're putting a little bit of a timeline on yourself to say, okay, I can live here for 3 years, and then I have 2 years where I can sublease it, and then I have to sell. So that's a good way of looking at it. Is this going to be purely a primary residence where you'll be for a long time, or is this something that you're going to want to turn into an investment property? And then in that case, I would go with a condo.
Great. Okay. And so obviously that's a question that can be discussed with your buyer's agent to figure out what's best. Great. Nancy, I'm going to kick one over to you. Another popular question is the Manhattan market more of a buyer's market today?
Manhattan market is definitely a buyer's market. It's been for a while, and now we're entering the third year of that. Prices have been falling in Manhattan more so than in Brooklyn and Queens. There's a lot of inventory in Manhattan, especially new developments, but especially in Midtown. Everywhere there's a lot of negotiating power, and that's a trend that we've been seeing for a while, and it hasn't changed yet. So if you're buying in Manhattan, it's a good time to negotiate. If you're concerned about space, there's a lot of inventory up farther north in Washington Heights and elsewhere around there. But in general, everywhere in Manhattan is a great place to negotiate. There's a lot of discounts, and buyers definitely have more of leverage there.
Yeah, Jenna, are you seeing? Do you agree? Are you seeing buyers having a bit more of the upper hand?
Yeah, and Nancy brought up a really good point. The reason for the negotiating power in Manhattan over Brooklyn is that we're sitting on a lot of inventory, especially in the luxury space, where these big giant towers were built up, and they were waiting for all these buyers to come in, and things started to turn differently, and they're still sitting on the market. So now that these developers are carrying all these apartments, they're much more willing to negotiate.
Great. Tony, I'm going to turn over to you to talk about down payments. So what do you see is the typical down payment? 20% is kind of the seems like the norm, but is that still what we're seeing in today's environment?
So I'll start by saying that I was the treasurer of my own co-op on the Upper East Side for many years. And every co-op has a rule where, or it's called a bylaw, where you can't really put down less than 20%. So, even if you have a buyer that's very well qualified and they want to do 10%, you may not have the ability to, because the listing agent or the board or the co-op itself will not permit you. So that's usually the rule of thumb for a co-op, where they require you to put down 20% because it's established in the beginning when the co-op starts itself as a corporation. So I would say on a co-op, unless you're buying from a sponsor is the original owner that still holds on to the shares. Now, if you find a sponsor-owned unit, sometimes the bylaws may not be applicable, so you can put down 10%. But if you're looking for a co-op, the rule of thumb is usually 20%. Now, it's a very, very different ballpark. You can put down 5%, you can put down 10%, you can put down 15%. Now, anytime you put down less than 20%, depending on where you're looking to purchase, you have something called PMI, which is mortgage insurance, because it insures the bank that, God forbid, if you were to be late on your mortgage or go into foreclosure, that insurance company would then step in and pick up or recover the losses on behalf of the bank. So if you have the ability to put down 20%, you don't really need PMI. But these days, we are seeing a lot of negotiations where the sponsor or the condo is permitting a lower down payment because they want to attract more buyers. Like Jenna and Nancy were saying, it's a great market for new developments because remember, most new developments have what they call an underlying mortgage, meaning somebody borrowed money for the construction end, and these are usually short-term loans. So these loans are about to be due, and the developers want to sell off. So we've seen, cases where the developers paying for all closing costs, paying for taxes for the next 3 to 5 years. So it is really a market for negotiation.
Got it. I'm so glad you hit on that. There actually are 2 questions in here about differences for down payment or mortgage on co-op versus condo. So you hit on that there. 2 birds with 1 stone. Great. So we did have somebody take us up on our post-closing liquidity offer. So can you talk a little bit more about that, Jenna, or Tony? Now I'm forgetting who was talking about it. But yeah, chat a little bit more about that and what people should know, how they should be thinking about it.
Sure. And I think this is super important because I can't tell you how many buyers I've had that are very versed about condos, co-ops, down payment amounts, but have no idea of what post-closing liquidity is. And understandably so, it's not exactly out there unless you really look for it. And what that really means is it's combining your monthly expenses, which would include what your mortgage amount is based on what Tony would let you know, and the common charges and taxes. And you pull that together into one number, and that's your monthly expense for the apartment. And what co-op boards look for is that number times 12 or 24 months. So basically what it translates to is that in the event that something horrendous happens, you lose your job or your plans change and you no longer have income, you are able to carry the apartment for 12 to 24 months, which is basically a way for the co-op to ensure that people that are buying into the building are not going to default on their mortgage.
Great.
And if I may add, just remember when you purchase or go through a bank has their own finance and post-closing liquidity requirements because they do know that even though, and they certainly don't want to see that you've exhausted every dollar you've saved to buy this home because they know that there's going to be requirements, there's going to be things that are going to come up. And again, it's all about the trickle down effect. They just want to make sure that you have the liquidity level, God forbid something were to happen. So banks usually will require 3 months, 6 months, or even 1 year of closing liquidity, depending on how large of a loan amount you're looking for. But great point, Jenna.
Absolutely. And I want to actually add something to that. As you were saying, Tony, I had a great point pop in my mind. Back to the example of my Chelsea buyer. This is something that I think is really important in today's environment. Co-ops are starting to tighten their restrictions a bit when it comes to how liquid the buyers are. There aren't any specific things in the news about this yet, but I'm starting to see from having bid on several properties that the buyers that end up winning or being the winning offer usually have more post-closing liquidity than required. So if you are able to show that, that's something that could put you ahead of your competition.
Great. I'm sticking on the closing topic. So how long is it taking homes to close right now, or is it normal, or is it quicker with everything digital? Maybe Tony, I'll give that one to you.
So I don't think we've seen a huge delay. I think the first week or two when all bank staff started to work remotely, that caused kind of a small delay, but things are rocking and rolling with banks. They're trying to take up as much business as possible. They want to provide liquidity to the mortgage market right now. From, I would say, start to finish, you would be probably at, just about 3 to 4 weeks. And that's very different than saying, hey, actual closing, because the time that the bank actually gives you the clear to close, if it's a condo, you still have to get board approval for the first right of refusal. And then, as Jenna can mention, on a co-op, you still have to go through the board interview, which could take another 2 months. So banks right now, turn time wise, can get you a commitment or a clear to close anywhere between 3 to 4 weeks.
Okay. And I'm going to see if we can do 2 questions in our last minute. Speed round, but this is kind of a big one. Nancy, questions about like where to buy. Are there certain neighborhoods where data is ticking up and maybe it's better to buy there, or different borough trends? Is there any insights you can give the audience?
Ooh, there's a lot, and it's always changing. We have some posts on the blog about the neighborhoods that have the most inventory for a budget, for a first-time home buyer's budget, and also neighborhoods where buyers have the most negotiating power and where sellers have the most negotiating power. Those topics are, we have a top buyers market post and a top neighborhoods for first-time home buyers post on the blog that you can check out. A lot of trends are changing, and amid the COVID-19 situation, the outer boroughs have the largest concentration of the vulnerable industries, and those were also the fastest growing jobs over the past few years there. So with the current situation, we're expecting price changes in the outer borough. We haven't seen any yet, but we're keeping traces of that. So if you're interested in the outer boroughs, keep a lookout for our data on a data dashboard and on our market reports. There's going to be lots of updates there in the coming months. So those are areas that we're looking closely, but there's a lot of resources about all the neighborhoods.
Perfect. And I am going to squeeze in one last question because I really do like it. And Jenna, I'm going to give it to you. But what questions do you appreciate people asking you if they're considering working with you? What do you ask them? And then any insights on questions that that people should be asking about to a real estate attorney?
Oh gosh. Okay, I'll start with the first one. So questions that I appreciate them asking me. That's a really good point. Honestly, I don't think I've ever even thought about that. I usually am the one asking the questions, especially during the first consultation. And during that time, I really want to find out what is it about this potential home that will make you happy, because that's the most important thing. You want to understand what the motivation is and the dream and the goal, because once we're on the same page about working towards the same goal, then I can be a much better help to you than if you're not sharing the motivation and the information with me. So that's really honestly the most important part. And when it comes to real estate attorneys, it's not been really about the questions. It's more about your communication style. And I think that's something that I would suggest when it comes to your real estate agent interview as well. You want to see how it goes in terms of, you always know when you're getting along with somebody, right, that you meet on the first time, whether it's how they listen to you, whether it's, just the jargon that they use. I also highly recommend working with somebody that has the same communication style. So whether it's, if you like somebody that texts you, you want to work with an agent that's okay with texting. And if it's somebody that, you need to be available to you after hours, whether it's 7 p.m., 9 p.m., or on a Saturday or a Sunday, those are important things to establish up front so that there's no bumps in the road once you get started.
That's great. Yeah, communication style. And honestly, what you said first, that person is asking you questions to find out more about what you're hoping for, I think is probably a very important signal. Wonderful. I mean, we are sadly out of time and actually 2 minutes over. And we didn't even scratch the surface on all of the questions that you asked, and certainly could have gone a lot deeper on a lot of these topics. I want to say thank you to our panelists, Nancy, Jenna, and Tony. Thank you so much for lending us your brains and your time. As mentioned before, there are additional resources on the StreetEasy blog, one block over. We'll continue to post new research and new data. We'll also send a recording out of this video along with some slides, so you can reference those in the future. We'll also pay attention to the questions that we did not answer, and maybe there will be a future webinar on that topic or some more posts on it. So thank you again, and thank everybody for joining this afternoon from all of us at StreetEasy, and hopefully speak for our panelists, wishing everybody the best on your home shopping journey, and look forward to seeing you on the other side of this. Enjoy the rest of your week. Thanks so much.
Bye.
Bye, everybody. Thank you.